Good morning, traders. Welcome again to the update here on the euro dollar and pound dollar. My name is Chris from Elite Currency. And as always, we're going to take a look first at the euro dollar. So we got the break, the bearish breakout to the downside, the price breaking through 120.50 and the double bottom here, and made a small bounce there, but ultimately enough selling pressure to push it through and reach our, the first target that is logical because of the round psychological support at 120. And that's where we got a bounce. With that bounce, we got a continuation. It didn't quite reach the previous bottoms, but it got quite close and was rejected there and now retesting the 120 support zone. So I think we're looking at a wave 3 basically of a wave C. Let's put that in perspective. This looks like a wave 1, 2, 3, 4, 5 to complete an A. I think we had an ABC here or maybe some complex correction ending here. Depends, not sure yet, but this could be a wave 1, 2, wave 1, 2, 3, and that wave 3 could go far. Let's take a look at relatively far for this time frame. Let's take a look. So basically could easily go to the WIS 7 at 119.25 in my view, if not even to 118.70 and the minus 161.8 target. All right, so that kind of breakout, I think, is possible if it is a wave 3, as I suspect. Then there should be a bear flag and another wave 5 down, and maybe another bear flag and another wave 5 down to complete basically the bigger ABC pattern. So I mentioned this a couple of times that if we get, this is a bearish pattern, that there could be a bounce at the resistance trend line and basically break below the ascending wedge. Now that we have the break, I think it is confirming the downside, and I think there should be more downside. Now 120 is still hasn't been broken, so I don't think this is a good spot for trading it right now because it hasn't been broken yet, and there could be some minor bounce. There could be a triangle pattern or maybe even a bear flag pattern like that. So if it does get up to 120.58ish, say 120.50, 120, even 120.75. That does look like a good bouncing spot to me, in my eyes at least, for downside. Or if it makes a triangle pattern like this, A, B, here A, B, C, D, and then E, then it looks good, either at the wave E or upon the breakout. Or if it breaks, if it doesn't make a pullback here, but it just flat out breaks right away, but it needs to push through 120, of course. Then a flag appears maybe on this hourly chart or even lower time frames, and then a continuation lower, to 119.50, probably 119.25 for intraday trading, and as I said, maybe later on 118.75. So this is building a good channel to the downside now. Let's put that in perspective here like this. So yeah, if we get the break, I would be looking for a hook back to the top of the channel, via flag pattern or some kind of correction. All right. Ultimately, let's put this in perspective on the daily chart. So we got a couple of bearish candles. We got fractals below the 20 MA, price below the 20 MA. So yeah, this is bearish as we suspected. And there's space to fall down to the 144 MA and the 233 MA daily support zone. There is divergence between these tops. That's these two reasons, with the price breaking below and staying below the 20 MA, plus the divergence and the 5-wave pattern to the upside. A couple of reasons why a bigger bearish correction was about time and that timing made sense. Let's zoom out a little bit, put the fib from here to here, and let's see, maybe even, let's see, from here to here, thinking which fib could be the best. Maybe this seems like a good fib here. Let's see what type of wave 4 it is. It could still be a shallow wave 4 here at the 38.50 fib. Those types of retracement levels are possible here, I think, for the downside. And also could be bouncing spots back for upside, of course, because ultimately the upside is still looking strong with that momentum to the upside, basically engulfing most of the bearish price action we had in years before that. So I still think that the shallow fibs will provide a valuable support zone, either this smaller fib or this wider fib. Okay. All right, pound USD. Finally showing its bearish potential in a way. All right, now this took really a lot of patience because of this pattern, this rising wedge pattern playing out, and those really test one, the patience basically in general of a trader. We had two rising wedges, in fact, the long-term one and a shorter one on the 4-hour chart. And it really was very volatile last week, with price staying in those between those support and resistance lines. I think now cautiously optimistic that a break certainly happened, but that a break will see some follow through. We had a break, pullback continuation here. Reached the 144 EMA, bounced at the 144 EMA. All of that makes sense. You see that 144 EMA is traditionally very important and often gets a bounce. Not always, but often. That's something what I explained in my SWAT course, which is not only waves, but patterns, moving averages, and fibs in general. So I think that that bounce logical. Now let's see if we can really get a bigger retracement than just this flat kind of sideways move. Of course, it's still at horizontal support, but considering the overall pattern, the multiple divergences, the multiple rising wedges, looking like the end of a 5-wave, really a lot of selling pressure here, and then the break as well to the downside. I'm just leaning towards more downside at this moment, in my view. It looks like a wave 5 of 5 has ended. In this piece there's a 5-wave, and then in this piece there's a 5-wave. So if we put the fib on the entire swing up, because that's the potential, I think, for the retracement, then the next fib really that is close by, if we use this fib at least, right, is the 23.6 fib at 132. So that's quite a big space. Of course, the price will need to break through the 21 EMA. It hasn't done that. The last break was September. The last time it was really a candle close below the 20 EMA was also end of September. So it has been a while. But yeah, daily breakout candle below the 20 EMA would certainly solidify that break, pullback continuation with a daily candle like that. Aiming at that 23.6 fib and the 144 EMA. Confluence there. That's the daily chart. On the 4-hour chart, I think the same, either like the euro dollar, either another pullback that could certainly happen to retest that trend line and the previous top. That wouldn't surprise me. That looks like a good bouncing spot. Or if it dips down and we get a triangle and a break, looks good too. Or really a break and flag and continuation, flag on this time frame or the 15-minute chart. So those are things that I think make sense for bearish setups in my view. Could it, any bullish potential setups? Not really, to be honest, in my view. I mean, of course, there could be bounces at 135 psychological level, at 132, and in between. I think those bounces are going to be minor. Some scalp trades on lower time frames for a few pips up. Yes, I could see that happen. Maybe a double bottom bounce. But I don't see really a lot of space for major swing trades or even, bigger intraday trades aiming for bigger targets. I just don't see that unless, as I said in my previous video, there's a clear break above 137.50 with strong price action, because of course there's always a risk of a false breakout. So that's my 2 cents. If you like this, feel free. I would definitely appreciate, of course, your 2 cents on Trustpilot about Elite Currency and myself, or Forex Peace Army, FBA. By the way, we also have some sponsorships from some of our partner brokers that provide sponsorships to our audience. So if you're interested in that, feel free to check it out. For instance, Monifex broker has ECS Live for free for 6 months if you join them. So those are things maybe to think about. Otherwise, of course, if you want to become a SWAT member, certainly would like to see you there. It's a big course, 22 videos, I think, or more, maybe 70 hour was it, I think 70 hours, if I remember correctly. No, that's too much. There's 70 videos. Sorry, but 22 hours. Excuse me, I got those numbers mixed up. But still, 22 hours, plenty of material to learn. It's all about moving averages, fibs, and patterns. So I think there's a lot of educational value there, in my view at least. 600-page ebook is included, and templates and PDFs. All right, that's it. Wish you all great trading. See you next week. Cheers. Bye-bye.